Okay, yes. So I'm gonna try and make this quick. So if you want to check out what happened yesterday, I've done a couple of tweets about the trade setup. I'll go over it a little bit in a moment, but I just want to start off here. I want to show you, I want to show you the high time frame and really emphasize this. So you can see this was our lower high. We were talking about that a couple of weeks ago. We eventually got the break of structure. We did get the slight pullback, and then we eventually broke down again. We're also talking about yesterday. Where's it gone? It's not that. There it is. Also talking about this high time frame range here, range high that we had come back and retested. So at the minute, you still consider this your swing range, okay? So this is our swing range low, this is our swing range high, okay? Now, you can see here that yesterday we broken this high here. So this is technically a 4-hour break of structure. So this could be the sign that this is beginning to shift bullish. And now we could be seeing the pullback to facilitate the overall trend. That is bearish, of course. So we could be seeing a 4-hour shift in market structure bullish, which is against the overall swing trend to facilitate the larger move to fill up supply and then go. Okay, so that would be the sort of 4-hour idea. Okay, now what also do we understand, and what we've been working out? That we have this macro range. Let's just get rid of that. We have this macro range here. This. Okay. See, we have left behind some unmitigated demand here, but this is the low, this is the high. You know, we had that breaker structure here. You see, we pull back into discount demand, double these, and now we're getting that shift in 4-hour structure. So it's very much beneficial to be aware of that. I think it's best we wait for confirmation really of this high that goes. If we can break above that high, and then we can expect this trend is continuing. Okay, so I think we need to see some indications that the macro trend is shifting. You know, we can see it on the 4-hour right now, but it may just be the continuation of this, that we come further down. You know, we have got unmitigated demand, we come further down, and then we come up. Okay, so we could be doing a little bit of up to facilitate more down. You know, prices constantly seeking liquidity, constantly looking to balance price. This could be where price is deemed fair value for buyers, and then there we go. Okay, that could be the scenario we're looking at. That's very much a prediction. It's very much a prediction, but it's a very probable scenario based upon the structure and the data we have right now. And of course, that can change within days. So, you know, we are looking at this for now as our swing range. So it's best to just stick to that. You know, if we are now seeing this bullish pullback. We do expect higher prices. We will be looking for shorts in this area. Now, if you're just day trading, it's pretty much, the larger picture is pretty much irrelevant to you. Yours, you really want to know is when you get to areas that are good for shorts, you want to be looking for those short opportunities. You get a nice play on the day, you can take profits, and then anything can happen. It doesn't really matter to you then. That's pretty much the boat I'm in. I tend to like to look at the macro structure for my stocks. I'll occasionally throw a swing trade in when I see a clear trade. You know, I was shorting on my swing trade account in these regions up here. But yeah, it looks like the 4 hours now broken into a bullish trend. So what are we expecting once we break structure here? You see, that was the high. We took out the previous low. We then flipped that high and we broke its structure. We held above it on the 4-hour. Now we're pulling back and we're expecting a retrace into discount demand, double D's to fill up more demand so we can take it even higher. Okay, so what can we be looking for? Well, first area that may jump out to you. Because of course this yellow region here around the 618, you've got a nice little wick there that you could take out, potentially take both of them lows. I'll just go further in. You know, you've got some liquidity here, potentially a nice area to be looking for longs, but you've also got this region here. So this region, so you can see this was the supply. That was what led to the breaking structure here. You know, that's a significant level. You got a great reaction off that. You can go check the video yesterday where we talked about that level. Got a great reaction off that. Lovely trade. You then bounce out of the 4-hour demand that built up over Asia, and you then eventually break that structure. Now, on the day, we were looking to short these regions here. You had a 618. You had the New York initial balance as your invalidation. There's a high probability that the initial balance will hold one side or the other. Didn't happen yesterday. Got SFP of those highs, and then you went. So, you know, a lot of action happened yesterday. You've also got to bear in mind that this is a pretty wild statistic I found yesterday, that there's been 16 Mondays in a row that have green candles. It's kind of crazy. But yeah, I want to focus on this more to finish off really. So you had that area supply. It was a significant high, took out a low. Okay, broke structure. Now we have a new high because it broke out there. Okay, so where was the zone that overwhelmed the supply? Well, we got the first reaction here, so obviously orders were filled. This was now mitigated once it came down. You filled up more demand in this area, and it managed to flip that area. Okay, so this is now our flip zone here. Well, technically it's all of this range here, between here and here. Technically anywhere below this is our flip zone. You know, but I like to refine. So ideally I'm looking for the pullback now to be coming back below the 0.5. Okay, so I'll be looking for longs below the 0.5. You've got this 15-minute demand zone. You've got all this liquidity here, right here. You've also got this gap down here, and you potentially could see this now as your significant low, and you have unmitigated daily supply here. So there's a good chance if you do come down to these levels, you've got a nice area of liquidity here. So that could offer a really nice SFP trade. You get that bounce out of there, you come back in, hopefully get a little entry there with a simple invalidation. That's a very nice risk to reward long. This is your week high, and this is a significant low. I wouldn't go strong just yet. Technically it's a strong internal low, but yeah, that's kind of what I'm after today. You've got 3 zones from a day trading perspective, you really want to be watching out for. You've got a Monday range, which obviously could come into play, whether it takes the low or eventually takes the high, which we would expect. And yeah, that's your probable scenarios, possible scenarios. You've got this region here, this region, you know, the gap I talked about, and then the potential SFP. All definitely areas of interest. You know, I couldn't tell you exactly one or the other right now. I really like this one, to be honest, but I'm very much aware that lower prices is very doable and almost probable. But we'll see. Yeah. What else? Oh yeah. You've also got your daily opens. So you can see here, as price opened, it pretty much just fell from there, and then UTC fell from there. So it's kind of already giving you an idea of your bias on the day. Happened pretty much yesterday. You got one retest of the daily open on CME, and it went. You had the UTC open there. You got a couple of tests, and then it went. So, you know, that could be a nice intraday scalp today. This yellow region here is also a 4-hour supply zone. So, you know, you've got a little bit of confluence there with that 15-minute and this little range here. Those, you know, you got impulse out of the daily opens. Definitely an area I'm looking for an intraday scalp on. Scalp short. If you're looking for scalp shorts, only take it above the 0.5. You know, you've got a higher probability of success. When you're taking shorts below the 0.5, it's much more probable that pullback is over and you'll be looking for the next leg up. So definitely be looking for longs below here. This is kind of like your premium discount line in the sand. Short potential above if you want to play that counter trend pullback, or if you want to play the pro trend day trade, you know, you want to be looking for longs below the 0.5. And yeah, I think that'll do. Good luck.